So one of the reasons that I asked you on was to try and get a handle on this idea of reconciliations, because this is something that a couple of people have discussed around this topic. So
Right.
what happens when we get to, so if we take like a fictitious company and we call it Fake News Inc., and they have got to the shareholders meeting and they've realized that a few weeks maybe in advance or a week in advance that 150% of the shares have voted. And then you mentioned
Right.
that they go into reconciliation in their dark and smoky back room. What goes on in there? Like, because I can't get my head around like what happens. Do they just agree that
It's
50
so
percent?
simple.
Yeah. Okay. So
Right.
please.
It's so simple. They do as they choose. They cast votes out and they take them out and they lower their vote until they are not going over 100 anymore. Okay, and so we prove again we have 1 million shares. We voted 1 million because I took back an extra 1 million. But we don't know who they took them from or whether they were the right people to take them from. And in many cases, they're taking them from the wrong people. They're taking them from individual investors who have accounts who paid cash for their shares, okay? And then they're giving the votes and the credit to people who've loaned their shares out. And so we don't know, and no one knows what to do in that dark room. I've been in some of those dark rooms, and some people would say, "Well, we're going to take out all of the latest votes cast. We'll just start subtracting today's, yesterday's, day before yesterday's until we get under 100." Well, these are the people who legally are the most entitled to vote. It's the last vote you cast that counts, okay? Not the first one. Some people will vote a month earlier, and then they'll change their mind and vote again and again, but it's only the last vote you count. Cast that counts. So some of them are doing this completely backwards. Most are doing it in a totally arbitrary manner, and they are just casting out names and voting positions, and they go, "Oh, here's I don't know, some little bank in Switzerland. Who knows them? What are they? They don't even know whether they voted or not. Boom, we'll throw them out." So we don't know what they're doing really, and it's totally arbitrary. And the other thing is that the rules are not entirely clear, okay? Because the rules of stock ownership and voting, they all go back to the days when securities were physical items, okay? And I talked at my beginning days in the paperwork crisis on Wall Street, and the debits always had to equal the credits. And if they didn't, you worked until they did. Well, the debits don't equal the credits anymore once stocks have been dematerialized. So you've got these we call them phantom shares floating around. Who knows where they are? Who knows who owned them? Where is the real underlying share? Where is that lodged? Okay, no one even knows. So unfortunately, yes, it takes place in a dark room in a totally arbitrary manner, and there are clarifications that need to be made to make it clear who has the right to vote shares. Okay, and once you're the legal owner, guess what? Some of the folks from Europe, okay, who were involved in GameStop and AMC, their broker is telling them, "Oh no, you don't get a right to vote." They're saying, "Well, where's my proxy? I wanted to vote my proxy." "No, you don't get that. You have a margin account." And I think some of these people were intentionally setting these up as margin accounts. They may have made disclosure, but some of them probably did not. And they arbitrarily decided, "Oh, you're in a margin account. You don't get a vote." This is ridiculous. You put money on the barrelhead for 100 shares of stock, you're expecting to get 100 votes. Okay? Not to hear, "Oh, you have a margin account and you get nothing. Oh, and by the way, I lent the shares to somebody else and I made money, but I didn't share any of that with you. So take a walk." So those are some of the problems that need to be addressed in this new era,
Yeah.
I hope.
No, that's something funny because there's something I was actually discussing with my best friend like a few hours ago, because I asked him had he voted yet, because I have my shares split across eToro and Stake, which are two platforms you can use in the UK, and he is on Trading 212, but Trading 212 have not allowed the votes yet from GameStop holders. So he was like telling me that there's a lot of pressure, but and it just seems like a ridiculous thing. Like if my broker can do it, why can't his? But I wanted to ask.
Right. And you know what? Here's another thing on this. Okay, I'm sorry to interrupt, but some of these throughout Europe and the UK, many people don't bother to vote at all. Okay, the shareholders themselves don't get this material, so they don't even know there is a vote going on in many cases. Okay, unless it's a famous event, so they don't even know this. But meanwhile, their custodian bank, the clearing company, or the custodian bank where the shares are kept, it's too expensive to them to participate in the voting system. You need to have an account at Depository Trust Company in New York if you're a U.S. listed stock, and that's expensive. And they say, well, I don't have that many trades, I don't have that many customers. So some have a chain of banks. They call them correspondent banks, and so sometimes they can vote, but typically until 2 or 3 years ago, we almost never, ever, ever saw a foreign bank or custodial institution cast any votes in a U.S. election. Okay, unless of course it was a Fortune 500 company and a lot of shares. So that infrastructure, we think our proxy plumbing is broken over here in the U.S. Oh, in the U.K. and Europe, when it comes to voting, there's no plumbing at all. There's like a giant clog, you know.
Well, I mean, London is quite famously the world center of financial corruption and money laundering, and just not a lot of particularly. Yeah, well, I mean, the Russians are laundering potentially hundreds of millions through there.
Guess what? By the way, that's another one of the biggest scandals that ever happened in the world of finance. And I must say, this was largely covered up by the SEC. But billions, hundreds of billions of dollars of Russian money was laundered using ADRs, these horrible old American depository receipts. And they would move them from one country to another, and then they'd end up in Cyprus, and suddenly they'd be turned into cash or a condo somewhere. You could guess where, too. It was one of the favorite spots to have your condo. But hundreds of billions of dollars were laundered through securities markets and clearing companies. Again, willfully blind, turning a blind eye to where all these shares were going. Okay. So that's another program, though.
Yeah, but I mean, there's so many examples of situations like this. Maybe not with ones with quite the size of money flowing around, but you could, like, every major bank or institution has been involved in some kind of level of either law breaking or questionable practices that have made them a lot of money,
right.
And they've kind of just got away with it for the whole of human history because
right.
of the amount of money. And
right.
this situation is actually finally bringing some light to it. And I don't know what's going to happen, but we'll see.
Right. This is relatively minor compared to some of the other, the money laundering especially. This is like a little bagatelle, you know, and it only came to light because of the GameStop and AMC trades and Hertz, and you know, and to put it in perspective, it's scandalous. It needs to be fixed, but it's actually relatively minor in the scheme of things. Because a lot of people think, oh, my votes don't have any value anyway, but they're wrong, of course. But it's not. There's no comparison between what happened in the world of money laundering and what's happening in the world of vote laundering. Okay, vote washing, we'll call it. All right.
Mm-hmm. So, is there a rule that says that there must only be 100% of the shares voted? That is there or is it just sort of a red flag for a company, or is there a specific reason that they go into reconciliation and say we have to have 100% or less?
Well, in other words, every position. Okay. See, here's the thing: in the aggregate, sometimes 100% of the shares are not voted, but still. There are people who weren't entitled to vote who did, and people who weren't entitled who didn't. But so it never gets discovered until each particular entity that is the custodian for the shares goes over 100. Then they go into the dark room and fix so they're under 100. Okay, but in the high days, in the 19 what decade am I looking for here? In the 19 aughts, so I call them the noughties, the 19, what am I saying? In any event,
1900s?
yeah, the late 1900s, let's say. Where was I going with this? People were going way, way, way over 100. They would go to their meeting, their annual meeting, and they would get the report because they hired somebody to count up the votes. And that person would tell them, oh, we have 200 million votes. And they said, well, I only have 50 million shares. How could this be? So back they would have to go to the dark room to start crossing things out until they could get down to the 50 million. Okay. So, but it doesn't happen that often because normally only, if 80% of the people vote, it's a lot. And it only gets that high because institutions here, institutional investors are required by law to cast votes because the Department of Labor said your votes have value and you must cast your votes. So big investors always cast their votes. Little investors often don't cast their votes. So it's rare that people do actually go over 100. Okay, so that's that one.
So the thing I'm really curious about is sort of what happens now when we get to next week and we have the GameStop shareholders meeting, and they, for example, say it's just 120% of the float is has voted. Is there a historical precedent for the shareholders revolting if some of the votes try to be like cancelled out? Or I don't know what the mechanism is. So say you're a shareholder
No,
and you have heard that your
right,
vote hasn't been counted because it's been struck off for whatever reason, it's been
right,
crossed out in
right,
the dark room. Like,
right.
what reconciliation do shareholders have if they find this out? Or do they ever even find it out?
They never find it out because it gets fixed before the meeting convenes. Okay, you can't really have a meeting and say that you have 110% of the shares voted. Okay, you're lucky if you can say you have 80% or 79%. So yes, I mean, and that's another reason why this problem doesn't get the attention it probably deserves. It's hiding in the background, and the votes get washed before the meeting convenes. Okay, so uh, once people were wise to this, and most people are using professional tabulators, so they're not going to send in their vote that's 10% over what they're entitled to vote. They fix it. They go back to their clients and say there are some mistakes here. Fix it, and then the client comes back with a better answer. Okay, but we don't know whether it's how they got to that answer, but it's as long as you didn't go over 100, you pass the test.
So one of the things that people have spoken about is a way that there could be, I don't know, some sort of way to combat or counter this idea of 100% or more of the shares being voted is if they issued a dividend to shareholders. And that would be one way of attempting to kind of call the bluff in a way. Like, what's like is that something that's real, or how powerful can that possibly be? What's the deal
It
with that,
could
basically?
be. It's wishful thinking, okay? Because many companies who pay dividends get in the same bind with the systems that keep track of the dividends are pretty good ones. They are the debits and credits match. If you think you're getting $100,000 dividend check in the mail, you don't want to be getting an $80,000 one. So those systems are pretty good. They're quite good. But they're different than the systems that are used for voting. And that's the problem. That's the proxy plumbing issue. We have pretty good plumbing. We have excellent plumbing when it takes pushing money through the system. But when it takes pushing votes through the system, no. We got a lot of smelly clogs and log jams and things like that. And so, no, just declaring a dividend is not going to solve it. And I know you had asked about paying in cryptocurrency, that's not going to solve it either. And guess what? Me personally, I say I want to see the credit in my brokerage account. Or better yet, send me a check so I can
Mm,
run to the bank and
mm,
cash it and spend it. So no, cryptocurrency unfortunately isn't going to solve the problem either.
mm.
Okay.
I mean, the proposal from some people had discussed the idea. It wasn't specifically like a cryptocurrency dividend. It was what's known as an NFT, which is a non-fungible token, which is
Right.
basically a certificate, a digital certificate that cannot be replicated. And the theory went
Yeah.
that if they could make exactly 100% of the shares worth of these for all of the individual shares, that then when they gave them out and some people didn't get them, it would expose the fact that there was more shares in existence than should exist. But you're
No,
skeptical
it
that
won't
that's a
happen.
no. Okay.
It won't happen. People who are entitled to get dividends will always be getting them, okay? But this is the problem. There, you prove to the outstanding shares, to the penny, and you pay people exactly the number of shares multiplied by the rate, and that's how much money you pay out. But the voting system is a different system, and as we know, there's nobody is keeping track, okay? If I lend my shares to you and you lend them to John Doe and John Doe lends them to Mary Smith, okay, and nobody has ever tendered any of those shares and transferred them, there's 4 or 5 quote sets of shares out there that aren't written down. Nobody's written down who loaned what to whom and on what day.
Hmm.
So it's a mess. It's a total mess.
So one of the things you discussed there is that earlier is that there is quite a lot of things that the SEC could do in order to prevent situations like this arising, to stop the proliferation of naked short selling, and basically to combat all of the things that we're seeing with GameStop, and we have been seeing with loads of other stocks since, like Eagle Tech and Overstock and all the other companies that have suffered because of these practices. What do
Right.
you think would be the cost of actually enforcing those regulations? Because part of me feels like if you were to suddenly go into Wall Street and go, "Hey boys, everything's going to be totally transparent, and we're going to know exactly what's happening, and we're going to make it a 100% free and fair open market," I feel like that might cause an economic crash. That's just
No, no, it wouldn't. No, it wouldn't. No, I would be more fearful of a crash if people were to lose confidence in the integrity of the systems themselves. Okay, as I say, if we weren't getting our money, then people would be up in arms. But if it's only votes, people go, oh well, what the heck? I wasn't too. That's not such a big deal. So no, it's not. It's not going to be like that. But they can fix this with really basically the stroke of a pen. They do need greater transparency. One of the things that the SEC did way back when was to say you need to disclose your short interest, your open short interest, and then we need to report it, and somebody needs to monitor it and say, wait, it's too high. You need to reconcile here. You need to straighten this out. But there's no real mechanism. There's no enforcement of that. Okay, so it would be easy it's easy to know how much the open short interest is. Okay, every broker knows, yeah, whether they owe something or somebody owes them something, but they don't make it easy to find out. But it is easy to find out. Okay, and then all you really need to do, and my understanding is that this is what they are either doing or planning to do in the UK, and that is that after 5 days you must close out any open short positions that you have by delivering the shares. If you don't have them, you got to go into the market and buy them. If you don't, if you delay, the clearing corp will go into the market, buy the shares, and debit your account for the cash. Okay, and problem solved. And going back to what I said at the very beginning, fails to deliver are part of a normal. That's part of a normal background noise, and so you can make allowances for the dollar amount or the percentage of the outstanding. You say, well, if the open short interest is a 10, 15% of the outstanding, well, the sky isn't necessarily going to fall in on us. But if it's 100%, 150%, yes, the sky can and will fall in on you, okay, if bad things happen. So that's all you really need to do, is to have a rule that says after 5 days, if your short interest is more than 5% of the outstanding, or 5% of the dollars worth outstanding, you will either buy in, or we, the clearinghouse, will buy you in and debit your account for the cash.
Thanks so much for listening. If you enjoyed the show, please subscribe, follow me on Twitter, or sign up to our mailing list. Thanks a lot to our sponsor, ExpressVPN, the #1 most trusted VPN. Get lightning fast connectivity with servers in 160 locations across 94 countries. Keep your browsing privacy safe with ExpressVPN and get a 35% discount on 12 months of ExpressVPN when you follow the link in the description below. Don't forget, my book is now out and available to order on Amazon and on bookshop.org. That's Brexit, the Establishment Civil War. And most importantly, thanks for listening. We'll see you next time.